What's going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, we're going to give you a midweek update and give you some levels to watch for the rest of the week on the stock market. We're going to give you levels on SPY, which is the S&P 500 ETF, IWM, Tesla, AMD, and QQQ. We're also going to talk about our strategy. That way you know exactly how we plan on trading these names, where we plan on entering, where we plan on taking profits, and finally, where we plan on placing our stop losses. So let's go ahead and get started by first talking about SPY, where we're going to talk about the daily candles, which is the macro time frame. So remember, anytime you're analyzing a stock, whether you're a short-term or a long-term trader, you want to start with the macro time frame. That way you know exactly where it's trading on the overall picture. So if you're looking at SPY, you do know that last week the stock moved itself into an overbought territory. An RSI over 70 doesn't only point to an overbought territory, it also points to the fact that there's a lot of relative strength in the stock. So this is actually a good thing for buyers, but the stock needed to come down and cool down before it can push higher. Now in the short-term history, we can see that every time we've dipped to the 10-day moving average, which is this blue line right here, we have come back to rally higher. And this time around, it looks like we held just above that point. So if you are bullish on SPY, you're going to need the stock to hold above the 10-day moving average going into the rest of the week. If SPY moves below that 10-day moving average, the next moving average support is going to be the 20-day moving average. Now we will give you some more levels to focus on if you're not a moving average trader, but just to give you something to look at on the overall picture, make sure you're paying attention to what's happening on the 10 and 20-day moving averages. Now on the shorter term picture, we can take a look at SPY and we can see that it is coming down towards a support of 433.55. This is a critical point because this is the point where we saw a very strong reversal between last Wednesday and Thursday. So we all remember last week's rally on that day where we went from 434 to a high of 445 and pulled back. Now considering this was the point in which we reversed, this makes that the most critical support going into the rest of the week. If we break below that level, then we can test the 432 point, which is not a very strong support. Below that point, we can dip to our price targets of 425 to 428, where we were able to take puts or short the stock anywhere below these points and place a stop loss just above them in case of recovery. Now, if you are bullish on SPY, if you expect the daily candle to bounce right off the 10-day moving average and for SPY to continue moving higher, then you need a breakout of at least above 439.50 for it to start moving towards its recent highs. But the real breakout is not going to happen until we move above the new 52-week high that we formed last week. So at 443.90, that should be the main breakout that you're watching. If we move above that level, then it will be a very easy move towards 448 to 450. Now, if you're in our group or if you're experienced with us as a community or if you've seen any of our videos, you know we are very bullish on SPY and we have a price target of around 480 to 500 on it within the next 12 months. But pullbacks in the short term are completely normal. People need to take profits and charts need to alleviate themselves. As long as pullbacks don't break very critical levels, in this case it would be the 50-day moving average, then we don't expect the market to have a full-on reversal. So even if SPY needs to pull back all the way to 420, it's completely fine. However, we will be checking in on SPY week over week, of course, in our videos. So make sure you subscribe. That way we can update you week over week. Now moving on to IWM, let's talk about what's happening in the small cap ETF. We can see that IWM moved below the 10-day moving average. So like SPY, it came down to test it, tried to hold it, however, it moved below it, and it looks like volume slowed down. So if we compare SPY to IWM, we can see that both days of pullbacks, selling volume slowed down significantly. So this is a good sign because it means that less people are taking profits than there were people buying up the stock. So the fact that we're seeing slow volume on these pullbacks is actually a good sign. Now, considering the fact that IWM is already trading below the 10-day moving average, if it breaks below a certain level, which we'll talk about in just a second, it can move below towards the 20-day moving average, which is right around 181 to 182. Now, looking at the shorter term charts here, that level is going to be 183.50. So if IWM moves below that point, then a short or a put position is possible, and you can take it down to a price target of around 181 to 182. Below 181, the price target is going to be right around 179. Now, if you've ever seen our videos before, you know the way that we treat our trades is, say for example, we were to take on a put position in this consolidation zone. So if we're leaning bearish on this stock, We can take a put anywhere between this resistance and this support. The idea is to start small, and we will add to our position if we break below this point. And then we will hold and take half our profits at the first price target. At that point, we would have placed a stop loss just above the 183.50 mark. So of course, if you are a short seller or a put buyer, you're going to need that break before you add to a full position. And at that point, if it breaks back above, you'll have a stop loss in place, or you'll go in there and sell because you know that your short or put setup failed. Now to the top side, IWM can break back above 185.90. If it does, that is a major pivot point on the intraday chart, but it's still not enough for us to justify a full-on swing trade. If IWM breaks above the 185.90, which is today's high, you can see that we moved to it very sharply and then sharply got rejected, making that a very important pivot point going into the rest of the week. If it was to break above that 185.90 mark, then it can easily rally towards 188 to 189, but the true breakout is not going to happen until it moves above 189.24, which is the initial resistance that caused this entire sell-off. You can see that it has been making lower lows ever since it got rejected at that point, making that the most critical resistance in its way. If IWM moves above that point, then we do have a price target of 191 to 192. Now, just like we treat puts or the short position side, if you are looking for calls on IWM, say for example it breaks above 185.90 and you decide to take on calls, considering this is not the full breakout that we're looking for, which is above the most recent highs, we wouldn't be able to swing calls unless it closes above 189.24. So if we take out calls above 185.90, we would place a stop loss just below that point and ride it towards a price target of around 188 to 189. If it closes above 189.24, then we can swing and place a stop loss just below 189 on the remainder of our position. Next stock on our watch list is going to be Tesla. Now, if you are trading Tesla or you traded Tesla today, then you know the stock experienced a full day sell-off, which is something that it hasn't seen in a very long time. The last time Tesla moved up in the morning and came back down was on May 23rd. Last month, and now Tesla saw that once again. Now, of course, last time this happened, Tesla only dipped for one more day and continued rallying. We are expecting kind of the same results here. This Tesla pullback is completely natural, but we will say that the stock is trading at a point in which it can use even a stronger pullback. So if you're looking at Tesla on the daily candles, you know that it formed what is known to be a bearish engulfing candle, where one candle fully engulfs the previous day's candle with very strong selling volume. So chances are Tesla may not be done selling off. Here are some key levels to watch. If you're looking at Tesla and you're looking at the 30-minute candles here, the very next support that you have is going to be right around 252.50. If the stock moves below that point, then it can be a sharp fall towards 247 and a second downside price target of around 242, which is going to be right around this support point right before it fills the gap down to 235. So Tesla is at a critical point in which if it falls towards 242, it can fill this gap down, and that would be a very sharp move down, and it may scare some people away. For now, the stock is trading above the 10, 20, 50, 100, and 200-day moving averages. So overall, it is a very, very bullish stock. It just could use a very strong pullback in the short term. It will likely shake out some buyers and then start its recovery mode back up. The stock may need some sideways consolidation before it moves higher. But as long as it doesn't really break below the 50-day moving average, then it is in good shape. We would prefer it to stay above the 220 mark, but we'll keep updating it as we put out more videos. Now let's take a look at AMD, which is the next stock on our watch list. AMD, like Tesla, had a full-on sell-off. Now, if you remember our video from Sunday, we talked about AMD, and this was the setup that we created on it. We talked about the fact that the stock pulled back last week while the market fully rallied, and each day was accompanied with strong selling volume. So if we look at AMD's last week volume, we can see that there were strong red candles over and over again until the stock finally broke. We talked about the stock breaking below 115.80 for the stock to move towards 111 to 112, and you can see that the stock here broke below 115.80 and sharply fell towards between 111 to 112. This was sent to our group on June 19th, and this was the setup that we sent. We took a 108 put, and our price target was 110 to 112, which the stock hit today. So overall, AMD followed what we predicted perfectly. We can take a look at it on the shorter term candles. We can see that the pivot point remained 126, very strong rejection at 126, and the stock fell towards that 111 support. Now today's move was very sharp to the downside, which means that it may not continue its move down to 105 so easily. So if you're planning on shorting the stock or playing puts on the stock, then be careful entering at the 111 break. The stock may need to bounce back towards 116 to 118 before coming back down. So if you are planning on shorting the stock, what you can do is wait for it to bounce towards 117 to 118, enter a put position, and you can place a stop loss right around 120 and wait for it to head back down. If it doesn't head back down and breaks above 119.10, then the stock may fill its way back towards 126, which is a key pivot point. Now overall, we are still bullish on AMD, but as we pointed out in our Sunday video, last week's selling candle was extremely strong and accompanied with very strong selling volume, so the stock may have some more downside action before it began recovering. Now to start off this week on Sunday, we did say that Powell is speaking this week, and we did give you guys a warning to give your calls plenty of time if you plan on taking calls. We are overall very bullish on the market, and we do expect the bull rally to run. However, we are at a point in which everybody is very greedy, and market makers know that. So they're going to make it a little bit more difficult or challenging in the next few weeks for us to continue rallying higher. So if you are planning on swinging calls, make sure you're giving yourself plenty of time on those calls. Now, last but not least, let's talk about QQQ, which is the technology ETF, and we can see it's trading right above its 10-day moving average. The last time it did this, it gapped down below the 10-day moving average. You can see the opening of this candle was just below that point, and it quickly recovered back up. If this was to happen tomorrow and it gaps below the 10-day moving average, chances are it will not recover back up and it will continue its move back down. So if the stock hangs right around 360, say tomorrow it opens and it opens right at that 10-day moving average and it doesn't move much and it can't recover back much of what it sold off today, then it is likely that it is going to continue its move down. Now here are some levels to focus on. If you are bullish on QQQ, you need it to move above 368.30 for it to have any chance of recovery back to the top side this week. You need to break out above 372.85, which is the recent highs, for it to continue its rallying towards 375 to 376. Now, day over day, we are seeing a lot of downside volume, so this is a good sign for bears, a bad sign for buyers. If QQQ stays below 364.50, then it is likely going to continue its downside action and move towards 357.50 next. And if it moves below 357.50, then it can move to 354, which is the 20-day moving average. We will place a stop loss at that point. That way you know exactly where to reference it and you can create it on your charts. So that is all we have for you guys. Thank you guys so much for checking in. We hope you found this video helpful. Please don't forget to subscribe and like.